When price meets time, the pattern is complete. This is something which we are going to discuss more in detail in this video. Investors and traders, welcome to the channel. Today is 10th of March 2024. I hope everyone is having a great weekend. As always, this video is for educational purposes only. It's not a financial advice, and I would like you to also read this disclaimer. Just give a few seconds for this. Okay, so with this out of the way, apologies for the lack of the videos to begin with. It's because, as I mentioned in my previous video that I did, that I was going on some time off, taking good holidays for a week in a sunny part of the world, because where I live in the UK, it's pretty cold at the moment and also raining. So I had a fantastic time, and also from a market's perspective, we have not missed too much because I had already given levels in advance, and this week, or rather the last week, we actually hit exact numbers in a number of indices. So this is what I'm going to talk more about. So usually we start by taking a look at the bond markets, the US dollar, gold, but this time it's really important. We are going to start with by taking a look at the US equity markets first. Okay, so what we are looking at is the daily chart of the Dow Jones Industrial Cash Index, and here we have been following a timing model, and with that we had some timing come in on the 27th of February 2024, so last month. And what we were looking for was we have to give it 2 to 3 trading days on the either side, and this timing had done a good work around here when we had this come in on 31st of October, and it was very close to a very important low. And here when it was coming in on the 27th of February, the chances were we could perhaps see some sort of a high taking place, and what we have seen is a top coming on the 23rd of February, and so far the market has not exceeded that. So with that in mind, we're keeping this date in mind, and the next key dates that we should be looking for are around the 2nd of April to the 4th of April. Here we have a fib external extension coming, and also we have the 54 trading days low to low cycle coming in on the 4th of April. And as you know, that when we have two or more patterns or ratios coming together, it's always something which we pay close attention to. Normally we take a look at these things on the price pattern or the price axis, but this is all being done on the time axis, and the time is a little bit more elusive. And with that in mind, we'll always be basically looking into with 2 to 3 trading days on the either side for these timings. And so far what we have seen is this timing work rather well. With that, I am actually now going to move to the S&P 500 cash index and move to the weekly chart. So here we go. So this is a weekly chart here, and one of our targets here was this 5188, and this is precisely what we have hit on the cash market last Friday. So that's pretty remarkable, because it's not just the cash index which has hit the 1.272 expansion of this swing from this swing high to this swing low. We have also seen this take place in the futures market, which I'll show you a chart for. And we have also seen key number that we're really watching for in the NASDAQ 100 hit in the futures market. Dow Jones Industrial completed a really important pattern. The level that we're watching for as well is only the Russell 2000, which actually did not make a new high, but it actually retraced to about a 61.8% retracement. So with all these indices and with the timing coming together, hitting these really key levels all in kind of a unison, it's really something really important that we should be paying attention to. And there's a good chance, especially with the timing coming in, that we might have seen an important top taking place in the market. And now the chances, from my personal opinion side of things, is that the market could actually be looked more from the short side of things if there are shorter term traders trying to take advantage of the daily movements in the market. Again, it's not a financial advice, but the shorter side might be which might actually be providing a better risk to reward. However, we will be watching for further confirmation because we are looking at longer term weekly charts. So we'll just discuss a little bit further from a price action perspective. Of course, we had this ABCD pattern completing around here 5100 and the expansion a little bit above that. And what we have seen last Friday is basically a kind of a fight take place between the bulls and the bears, and there was just not a really clear winner, but the bar did close bearish. So basically the close was below the open. The open was 5130.99 and the close was 5123.68. So the bears did win by a small margin, but essentially what it is just a trading range on the weekly chart. So but again, something really important to take a note of, that we at a really key level we were not able to go any further, and in fact close lower for the week. With that, we'll just move to the futures. This is the S&P 500 E-mini chart. Here a little bit of a different picture, because what we have seen is the market go and touch this 5144 level, also the ABCD being a little bit higher. But the futures chart is actually, the weekly close is still positive, so that's an important one to take a note of. Now if we look at the NQ, so this is the NASDAQ 100 futures chart. Here the key level, the long time subscribers will know, we were really watching for 18,570 for a long time. So this level has been there for weeks, maybe a few months in advance, because this is the 1.272 expansion of this swing high to this swing low. So basically the high of the market in November of 2021 to this bear market's low, which happened to take place in October of 2022. And it is the 1.272 expansion of this. So last Friday the market actually went and touched this level, and just like the S&P 500 cash index, it actually closed a little bit in the negative territory, about 41 points lower. But again, it was a trading range. There was a fight with the bulls and the bears the whole of the last week, and then the bears did win by slight margin. So again, this kind of a bar is a trading range bar. Now this is typically something which happens when there are moves which are extended. That market actually begins to move into a different kind of a phase where it begins to transit from a trending move into a trading range move, and this is something which we might be actually seeing over the next week or so. So on the daily chart, there could be a further movement up and down, but essentially more like in a trading range fashion. So this is what might actually be happening, that the market actually be transitioning into a trading range. Again, if these levels are taken to the upside, then this pattern that we're watching for gets invalidated, and we have the further levels to watch for as well. But for now, it looks like the weekly close was actually a little bit lower after the market hit this level. And the important thing is that the cash market in the S&P 500 also hit the 1.272 expansion. So we have two major indices, one in the futures market hitting that cash index, and of course the S&P 500 futures actually had already touched the 1.272 and in fact went a little bit higher as well. Now we'll take a look at the Dow Jones Industrial Market. Here we go. So this one is really interesting because in the Dow Jones, what we are seeing is essentially this bigger one-to-one price projection, which I've labeled as ABCD, also completing right around where the market went to, which was also around right at the 1.272 expansion of this move here. So this I've actually highlighted this with this shaded area around here, and this is, you can see this market has been in a trading range for the last couple of 2 to 3 weeks, and it's just with the ABCD formation taking place. We also have this 1.272 expansion. So we have a confluence of two things coming together. So we'll be watching really carefully the price action next week, because it could have a potential that the market, which has been going up since October of last year, might in fact be ready for some sort of a pullback. So this is what we are really watching in these indices. This is the third index where the market has actually gone and touched this 1.272 expansion. We have seen it in the NASDAQ 100 futures chart, of course the ES futures chart, the S&P 500 cash as well reached this 1.272 expansion. So a number of these key indices that we follow are hitting these key levels that we have been actually watching for quite some time. And with the fact that we were watching for some sort of a timing to come in together, so we need to really pay very close attention to price action next week. Okay, now let's take a look at the Russell 2000. So here we go. So the Russell 2000, this index is, of course, you can see is much weaker than the other indices, and it has not made a new all-time high. The others indices, for example, Dow Jones, the NASDAQ 100 futures, S&P 500, they did. So if we were to just see the retracement come in here, let me draw my 6.18. Here we go. So this market actually took these highs by a small amount, and it looks like it was just reaching for this 61.8% retracement, but the weekly close is still a little bit positive. So again, watching this market really carefully as well. The important thing is that some of our key levels, the patterns that we're watching for, they are actually beginning to or have completed in pretty much all these major indices that we like to follow. Let's also take a look at the NYA. This is New York Stock Exchange Composite Index. It's not something which is traded, but it will include the ADRs as well. So American Depository Receipts of foreign stocks basically being traded on the S&P 500. The good thing to see is that it has made a new all-time high as well by taking out these high, but it hasn't really gone and touched the 1.272 expansion. So again, it's on it. It looks like it's on its way. We'll be watching for the price action in this one as well, whether it's gonna close bearish or bullish next week. I think that's gonna give a lot more clues about this, what the direction the market is likely to take over the course of next few trading days or weeks. One possibility still remains, just trying to check this, whether it has. Yep. So if there was going to be if it does try to make an attempt to 1.272, it will also be completing just right above the ABCD pattern 1-to-1 price projection as well. So this is something which we are also keeping a note on. Okay, now let's move to the bond market. So here we go. So this is the weekly chart for the long bond futures, which is the 30-year bond future chart. And as you know, that we were watching for this 118.30 level as a really as an important low, because we also had the 38.2% retracement come in a little bit below that. We did have a rally for about a week, but the sellers came in, and then what it did is it actually completed this 1-to-1 price projection just slightly above the 50% retracement. And we'll just go and show you exact pattern formation on the daily chart. And here what we are looking at is basically this market could in fact be trying to rally in an ABCD formation to the upside, which could in fact see this market go and challenge these highs around 133, 134 level. Even if it does that, look at this. It's just this market has been just going down since March 2020. So the COVID region, when COVID roiled the markets back in March of 2020. and it could rally a fair amount, but it could still be in a bear market, and maybe the 38.2% retracement comes a little bit above. So it might actually be just a retracement to the 38.2%. Now let's take that to the daily chart. This is where I have actually drawn it for you. Now this move is a little bit different to the move which we have seen in the past from a symmetry perspective, because in the symmetry, whenever the market was rallying about this much, which is these blue lines I have drawn, the sellers would come in and the market would actually sell off pretty strong in a pretty strong fashion. But here, this low which came in October of 2023, which is whereabouts the stock markets, the major indices also bottom, but the bond market actually bottom, the long bond futures a little bit earlier, but in fact a week earlier. This move is pretty strong, and then actually higher than or stronger than the symmetry move here. So something has changed in the structure for the market. This makes me believe that in fact what we might actually be looking at would be this ABCD one-to-one price projection, which I've drawn in this red line around here, which could see the market go to as high as about 136, and above that around 139, 140. We have the 38.2% retracement. So the market might actually be trying to go in this region, and then we'll have to the 38.2 comes around 134, and this is where the market actually might be trying to go with an ABCD formation, and this is where we'll have to pay really close attention to whether strong resistance comes in or the market is strong enough to be able to take out the 38.2% retracement. And if it's able to take it out to the upside, that's going to be a really positive sign for the rates, that the yields are likely to move lower. But till that happens, we really need to also keep that scenario in place at the back of our mind, that this rally might in fact be just a corrective rally in an overall bear market, which has been going on since March of 2020 in the rates or in the long bond futures. So just keep that at the back of our minds. Now let's quickly move back to the weekly chart, and we'll have a look at the 10-year treasury note as well. So this is the 10-year treasury note. Here the pattern has been slightly different compared to the 30-year bond futures, because here we did not have a one-to-one price projection ABCD. We had this CD leg was actually a little bit of an extension, and it came in right about the 1.618 mark of this AB leg. So a little bit different pattern, and right about the 50% retracement of this low to this high around here of the 26th of December 2023 week. So again, the possibility exists that we might in fact be going in a ABCD one-to-one price projection higher, taking out these highs, and perhaps trying to make an attempt to 118, which is going to be the 38.2% retracement. So we'll have to wait and see. But the past week was a positive week, which means that the yields actually pulled back as the price moved higher for the 10-year treasury note market. Now let's take a look at the dollar index. So this is the dollar index chart. Here, one of the things that I would like to point out is we were actually looking for this ABCD one-to-one price projection in 108.75 level perhaps was achievable for the dollar index. But what we have seen is, and that was at the back of 7 weeks of positive momentum in the markets. 1, 2, 3, 4, 5, 6, 7 for about 7 consecutive weeks. I know that there's like a trading range in here as well. The market was actually moving higher, and now a pullback of about 3 weeks could be, something could be expected, but it came off right from the 61.8% retracement as well, and we have this trend line here as well. So 1, 2, 3, and then we have this trend line here as well, right from these lows of May 2021. 1, 2, 3. So this also 1, 2, 3 here as well makes it a wedge formation as well. Now I believe the chances are really at this stage 50-50 in my opinion, with a slight I would say more on the dollar getting weaker rather than stronger that we were actually thinking about for this pattern. The chances are that perhaps maybe about 55% chance that the dollar keeps on getting weaker from here because of this wedge pattern formation, and we have this trend line around here. So the earlier indication will be if next week the market is able to close below this wedge trend line lower part of it, and especially if it's able to take out the 101.25, which is 78.6% retracement, then we could have basically the market testing the lows of 99. And for a long time we have stated that the market really needs to clearly take out the 99 level to the downside. Then we could be looking at an A, B, C, D to the downside for the dollar index, where it might just go and test these lows one more time as well. So that chances remain. So we'll have to wait and see whether it's just a pullback and the market actually begins to do another ABCD to the upside, and finally we might actually get up to 108 level. So otherwise strengthen the US dollar, or the US dollar keeps on getting weaker, where there is actually slightly more chance of it in my opinion happening, and in fact might actually break to the downside of this wedge formation. So really important for the dollar index. We'll have to wait and see what's going to do, and with that we'll just quickly take a look at the Euro USD. So this is kind of a mirror image of the US dollar, and here what we can see is because the US dollar is about 51% euro composition. So here what we have is this trend line we can draw like this, and it seems to have been supported, and if the dollar index keeps on getting weaker, the euro is likely to go and challenge these highs and then these highs, and we could have an ABCD which could see the euro move much higher. So what we were looking for these lows to get challenged and maybe even to the 50%, that scenario might not take place as well. So we'll keep that in mind, and I'm going to put a question mark around here as the probabilities now change for the market. With that, we'll take a look at the gold market. As we all know that a weaker dollar actually favor the gold prices like to have a weaker dollar, because a weaker dollar actually positively impacts the gold prices in terms of prices moving higher. And we have seen a fantastic move in this market taking place over the course of last week and a few more days. And we were looking for a chance for the market to in fact come down to around 1938 level. That was at the back of a stronger US dollar, but of course that scenario hasn't taken place, so I am going to remove that right now. So here we go, and what we have seen is fantastic move in this market, and now it's going and testing the 1.27 to expansion of this move from this high to this low. I've not labeled this one, and here this is where we have seen the market pull back a little bit as well. And of course it was the end of the week as well, and on Fridays some big players don't want to carry too much risk because of the weekend and might take profits or be just out of this market. We have a number of these ABCDs which complete a little bit higher as well. So if this move, which is quite extended, if you look at this, is becoming a kind of a parabolic move as well, and then we could also draw some sort of a trend line right here as well, like this. So one touch, two touch, three touch. So it could be some sort of a wedge formation as well, but in a parabolic fashion. But from an ABCD one-to-one price projection perspective, the key regions that we are watching for where the market will in fact get up to is there's a possibility 2260 to about 2300, that region, that zone. We have a number of these coming together. So we have an ABCD in the cyan color, completing right here where we have the 1.272, where the price actually reached last Friday. So we could have some consolidation taking place, maybe a little bit of a pullback. That's also possible. It could do a pullback a little bit, maybe to 38.2% retracement, and then make another move higher. That's also a possibility. Then we have this red one-to-one price projection completing around 2280. Just below that we have the 1.618 expansion of this swing high to this swing low. Then we have the 1.618 expansion completing of this swing high to this swing low around 2240 level, and the blue ABCD, the smaller one, completing around 2322. So it looks like we are in this region where we have 2250 to 2300, a $50 range, fairly broad range, where this market could get up to, and then we'll have to wait and see. So my concern is that whenever we have seen gold go parabolic, then we have seen some good amount of pullbacks coming in the market. So here they went in March of 2022, the gold went a little bit parabolic, the kind of move we are beginning to experience now, and then it topped, and for a number of months it just went down. Something similar happened around August of 2020, and then for about a year, year and a half maybe, yeah, actually about 1 year, the market just went sideways to down before putting in this base around here. So that remains a concern, that it looks like the gold trade becomes kind of a one-sided trade, and then it looks like at just one time a number of players want to exit the market, and we just see some declines come in. But we have to pay attention to these pattern formations, which a number of them are coming together around here right now. So this is what we are looking at in terms of the markets that we like to follow. From the stock market perspective, from timing perspective, I think next week is really crucial, and we should be paying really close attention to the price action intra-week. And of course, if those patterns get negated, because anything is possible, then we know that the timing that came in, maybe the pullbacks that we have seen is all we're going to get, and we'll have to reevaluate and look at the next price patterns. But for now, what I have pointed out, all those key markets, the S&P 500 cash, the ES, which is the S&P 500 E-mini futures, the NASDAQ 100 E-mini futures, Dow Jones E-mini futures, they all reach those 1.272 expansions in kind of a unisense, which is something quite rare to happen, because if you have been following our channel, we know that we have seen one market leading the other market. So when the rates began to get put on hold as of last year, for example, we have seen the NASDAQ lead the S&P 500. At some moments the S&P 500 is stronger, for example the Dow Jones. So the markets and the sectors within these markets then begin to rotate, which makes the one market move faster than the other one, for example. But what we are seeing is that these number of these markets hitting that key level of 1.272 expansion pretty much at the same time, it's something quite rare to happen. So that's why we really need to pay really close attention to these markets next week. With that, thank you very much for watching the video. Good luck and good trading. Speak soon.